Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
You know, I've traded all those different classes over the years. And the more I knew about global macro just helped me across the board, and maybe that's why I do it, because I've managed stock portfolios and I've traded, all the physicals before in the commodities world. So I've been thinking in that way, and it fits very, very well to the currency side, because you're just trying to get a handle on money flow, and money flow drives all asset classes.
Good point. Paulie has a basic question, although I think it's excellent, and he says, when they do the carry trade, what's the biggest risk to that investor? And I think people lose sight of it, right? They only look at the interest rate differential and how much they're going to make. They're not looking at the potential, as you talked about, expectations. This is something that investors have a hard time with, is understanding what other people's expectations are. They just look at those finite or nominal numbers, don't they, Jack, and get themselves sometimes in trouble?
Right. They look at static numbers and say, volatility is low. The U.S., excuse me, the Fed, it's not going to raise rates as far as the eye can see. Liquidity is going to continue to be strong, so asset prices will keep going up. So we'll borrow that low currency and just continue to, make money on the spread. That's why you saw the massive bankruptcies and bankruptcies and run back into U.S. Treasuries. The same trade was going on. They used the Japanese yen, as you said earlier, Steve, at the time. During that boom for 2002, 2007, the yen was the carry trade, and everybody was very happy for a long time. And then you get that massive position, and all of a sudden, the out-of-the-blue event, which was the credit crunch, people made money for 5 years, 6 years, very good money. Their hedge funds were very happy, and all of a sudden, in 1 week, they were out of business. So that's the problem with the carry trade. It's very, very good, but you can be destroyed very, very quickly, and you just go away. Your fund is just no more when you get a out of the blue event, and that's why we call ourselves Black Swan Capital. There are black swan events out there. No matter how smart we are, we cannot forecast. And when you're over leveraged in something like a carry trade that looks so good on paper and has looked good for months or years and even before, pretty soon you're shining shoes.
Lucy has a question, and she wants to know, what's the best source of news affecting the currency market? Where do you go, Jack? And where would you recommend others go?
Well, we have a Reuters screen, and that's really expensive. So that to us is the best single source of currency news around the world. We get direct feeds from Reuters, coming in. But if you had to go like offline and stuff that's free on websites, just Bloomberg.com has a lot of great stuff. Yahoo, international news, they give some of the top Reuters stuff in there. There's no really one holy grail here. I think it's just an idea of just getting a handle on money flow. And if you're in terms of the the time frames we're talking about for the fundamentals, you don't need an expensive feed to do this type of analysis. This type of analysis, you want to step back and take an intermediate term view, so you don't need to do that. MorganStanley.com has fantastic global economic analysis, all free. Brown Brothers Harriman does a good job on analysis. There's a lot of good stuff out there that is free. If they want to just send an email to me at info@Black Swan Trading, I can give them a whole list of places they can go for free to get some good global macro analysis.
Oh, that's great, Jack. Thanks. Yeah. So info@BlackSwanTrading.com. Just send Jack an email, and he'll turn that back around to you. A couple more questions. Andrew wants to know, two-part question. Do you take the view that pigs have an incentive, with pigs are Portugal, Italy, Greece, and Spain, have an incentive to keep the euro? And then the second part is, can they actually externalize or push their deficits onto Germany? And I think, Jack, you've actually talked about this a little bit tonight and also in other webinars, but if you wouldn't mind just sharing a little bit more on that.
No, I think it is their advantage to stay in the euro. There's a lot of protection now, especially these times. But that, another risk event, and that may change because, as I said, and we wrote a 20-page report on this, and I think we posted it at your site, and we did.
Absolutely,
Steve.
Yep.
Yeah, they can get a
Euro implosion, correct? I think that's what. Yep.
But right now the incentive is to stay, I would think. But those incentives can change pretty quickly. What was the other part of the question? I'm sorry.
Oh, can they actually push their deficits on to Germany? Will Germany be willing to actually finance that to keep it together?
Yeah, they can't necessarily push the deficits onto Germany directly. But, again, Germany takes a bigger role in this, and if funding is needed, they pony up the most. So indirectly, yes, to keep the European Union together, but and then that's what I said before. If the disincentives get so great for Germany, who has their own internal political class they have to worry about, this idea of trying to push everything off on Germany to subsidize the union changes, and that's really the key to watch. So indirectly, to a degree, they can, but not all of it, of course. They have to take the pain of it at some point.
Yeah, good point. Dave has a question. Jack, what do you think? What's your best economic scenario for the recovery for the United States? What should the U.S. be doing? We know what we are doing. What do you think?
Well, I come at this from a totally different view. Larry Summers, who basically runs economic policy now for the U.S., is very much a neo-Keynesian type of guy. I come at this from a very Austrian hard money school type of guy, and I just see what I believe the mistakes they're making are prolonging this, and they're locking us into, even though they know it, and they know their economic history, these are smart, very, very smart people. They just have a different view and a relative cockiness that is so overwhelming to me. But it appears basically their policies are locking us into subpar growth many, many years in the future, because they have disincentives for the type of people that actually grow economies, and it really starts with the entrepreneur who creates jobs and creates new products and creates growth. These guys are taking a top-down view, and they're saving the dinosaurs on the high side, the politically connected types, and the money is not flowing into the areas it needs to be, again, just because of their policy choices. And the hard money view, Austrian view, says that sure, you can have some safeguards, and you should for your citizens, but to a degree, you have to let these excesses, which are malinvestments, wash through the system. It's the only way you're ever going to have vibrant new growth in the future. You have to cut taxes and get money into the real economy. This government is raising taxes, and money is going into, the financially connected, just the opposite. So it's a huge, you can see my view is very, very different than theirs.
You're not a big proponent of cash for clunkers.
No, not at all. Not at all, especially when we buy Japanese cars. Would any other government in the world done a cash for clunkers and allowed them, to buy American cars? No. But, of course, the U.S. does it. It's a very strange place indeed.
Let's see if we get one or two more questions.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.